focus to the commodity space. One big positive trigger for this market is the fall that we've seen in Brent crude prices. And Manisha Gupta has been, praising us of that. Manisha, morning. What are you tracking today?
Sonia, thank you for that. Well, this week, every day, we have seen a decline come in for the crude oil prices. So we are trading below 75 for the Brent prices. We're also trading below 70 for the WTI prices there. And it's a 5-month lows that you are looking at in sense of crude oil prices. So with nearly 4% of a decline coming in for the crude prices, this hasn't been such a great week. And not just crude. This is what the other commodities also have done. So while the crude is trading at a 5-month lows, you have natural gas at a 13-week lows, heating oil 4-month lows, and the gasoline prices are the most hit, trading at a 1-year lows in the international markets. This is what we've done in sense of the previous week in a case of prices there. So while the week has seen 8% of decline come in for the crude oil prices, natural gas is down by 8.5%. It's a 6% decline coming in for heating oil and gasoline. The only thing, as I've been telling you, the positive trade has been in case of coal, where we've seen 9% of gains. Nearly $140 a ton is how coal prices are trading right now. But for the crude oil prices, there are various concerns right now. To begin with, while we've seen the U.S. inventories for crude decline, crude gain up, the gasoline inventories have jumped up by 5.4 million barrels. So that tells you that the demand seems to be slowing down in U.S. as well. And not just U.S., you are looking at concerns that the OPEC and allies, while they have talked about a 2.2 million barrels per day of a cut, but remember that is voluntary, and markets do believe that you may not see that happen on ground. On paper itself is much on the lower side there. And then apart from that, it also is about the Chinese demand, which has been on the weaker side. From Moody's giving an outlook in sense of negative, the kind of imports that we saw in China in major part of this year tells you that China is sitting on huge inventories, and if the demand does not pick up, then China may not want to import so much going forward. So that's one another market which may not be looking at so much demand coming in. The dollar index trading at a 2-week highs has been putting pressure as well. And then you have the PMI data that came in from Japan, US, Eurozone. All of that came in on the weaker side for the month of November, and that has been weighing onto the markets. It also has been about Saudi Arabia for the first time in 7 months cutting the prices, official prices that is, for the month of January, saying that the demand seems to be easing and the premium is coming off. And that tells you that those 95, 96 kind of levels that we saw in the month of September perhaps are not coming in a jiffy. The street is expecting that there could be a surplus in this quarter and the next as well, and the demand hasn't picked up yet. It's all going to be about the US non-farm payroll data tomorrow. All eyes on that for further direction.
All right, Manisha, thanks a lot for that.